Ladies and gentlemen, welcome back to another video. I'm your host, the Dividend Aristocrat, and today we're going to be talking about my most recent sell in my portfolio. Now, just to preface, by the time you see this video, it'll be about 2 weeks since I sold the stock, but I am recording some videos in advance because I will be on vacation. Now, the stock that I did decide to sell, and I think a lot of you could have seen this coming, is Union Pacific, ticker symbol UNP. In this video, we'll take a look specifically at when I purchased the stock initially, my dividends from the company, and my total returns. I'll also go into some details as to why I sold the company, and I'll show you guys a little bit of their financial information. If you guys do enjoy this type of content, I would appreciate if you would consider subscribing. It helps me out a ton, and I'm on my way to 2K. As a reminder, this is not financial advice, and I'm just merely sharing my opinions on this channel. So real quick, let's take a look at my portfolio dashboard. I'm currently sitting at a total amount invested of $30,200. My portfolio value is at $42,807. That gives me an unrealized gain of $12,606 or a total return of 41.74%. Since starting this portfolio, I have earned $1,161 with dividends, which have all been reinvested back into the companies that I own in my portfolio, and my yearly projected income going forward, meaning the amount I'm going to get paid each year going forward, is $724. My current portfolio yield is on the lower end, and you guys know I prefer it that way at 1.69%, and my yield on cost is higher because the price appreciation has outpaced dividend increases. Now, after this video is over, I will be updating both my cash position and my total holdings. I now will have 22 holdings going forward instead of 23, and my cash position will be closer to $7,000. So without further delay, let's take a look at my portfolio holdings section of my spreadsheet. And the reason I'm bringing you guys here first is to show you where Union Pacific ranks in terms of total return in my portfolio. So at number one, of course, we do have Microsoft at over 90%, but if we look down here, Union Pacific actually comes in at number 12, which is fantastic. Now, buying this company, I did expect a rebound in stock price, and I was honestly hoping for a little bit more, but I can't complain too much about what I've been able to get in such a short amount of time. So first, as we can see here, on March 15th, 2023, I bought one share of Union Pacific at $191 per share, which at the time I thought was a very good price for the company. And now, not to waste any more time, I just want to show you guys my sell for Union Pacific. It happened on the 16th of September, and I'm actually recording this the day after, and I sold 1.028 shares. The reason I had 0.028 extra shares is because of dividend reinvestment, and I sold at a price of $252 per share, which gave me a total order of $259.06. Now, what you see here are the only sells I've ever made on my portfolio so far. I am a buy and hold investor. I don't like to sell companies, but I have been trying to sell some companies for a couple different reasons. If you guys want to see the video where I go in depth and talk about my reasoning for selling Coca-Cola stock, check it out right here. I'll pin it up top. But for Union Pacific, there are several different reasons. And the first one you might notice real quick is that this is a very small position. Hopping into the My Pie section of my spreadsheet, you can see Union Pacific right here with a big red block on it, and that's because it was on the chopping block for quite a while now. And this is what I mean right here. The total portfolio allocation for this position was only 0.6%, which to me is too small of a position to be holding. Now, the decision I had to make, in my opinion, was whether I was going to buy more of this company or if I was going to sell the position. And of course, I ended up choosing to sell the position, just like with my Coca-Cola shares. And I'll tell you guys some more reasoning in a little bit. Now, big shout out to everybody who voted on the polls and contributed their opinions. I think I posted 2 polls on Union Pacific asking what you guys think I should do with my position. And the majority of you guys said buy more or hold. But of course, I ended up going with the minority, which decided to say sell. So if I'm wrong with my decision, you guys can definitely roast me in the comments in future videos. Moving back into the portfolio holdings section of my spreadsheet, now that you guys have seen both the buy and sell for this position, I want to show you guys the rest of the information regarding my holding in this company. So my average price paid was $191.96, and the current price is at $253, but I sold, of course, at around $252 per share. And in total, I purchased one share of the company, and with dividends reinvested, I owned 1.028 before selling. Now, according to my spreadsheet, my total return is at 35.78%, but that's not totally accurate, and that's because I sold the company yesterday at a different price for the stock. So if I set V1 equal to my initial buy price in Union Pacific and I set V2 to the amount that I sold it for, we can calculate my total return for this position. So that gives me a total return of 34.95%, and I cannot complain about that too much. I held this position for basically exactly 1 year and 6 months, or 1.5 years, and that's a pretty good return for this company. Now, I do want to reiterate, because I'm sure I'll get some comments about this. Why are you just buying companies in order to sell it? That's not my intention with any of these companies that I purchase, or at least not the companies that go in my Divine Dividend section. Perhaps the ones that are my turnaround plays, then sure. But for my Divine Dividend section, I am looking to hold them long term. I will explain the majority of my reasoning in this video, but keep in mind that I'm not selling right now because I think the company will do poorly in the future. It's just that I'm making room for other companies in my portfolio. My goal in the sell was not to get some quick gains or even to maximize my gains from this position. It was just to exit a position that I no longer wanted to be in. Moving forward, we can see that I earned about $6.58 in total dividend income, and it is a very small position, so that makes sense. And the yield on this position is currently sitting at 2.11%, but my yield on cost was at 2.79%, and we can see here that small allocation that I was talking about. Now, another reason I sold this company is because of the low employee satisfaction with Union Pacific. Now, let me know what you guys think about this in the comments, but I think I'm going to be incorporating this into some of my holdings going forward. I think it's a pretty important thing to look at, and if employees are unsatisfied, they're not going to be working that hard, and they're also going to be looking to move into other companies. I can imagine that based on these reviews, Union Pacific probably has a very high rate of attrition, and that's not a good thing for a company to hire so many employees. At a 2.4 star rating, this is one of, if not the lowest rating I've ever seen on Glassdoor, and it's also lower than their competitors. Only 25% of the employees who left a review would recommend it to a friend, and only 19% of the employees approve of the CEO. Now, these are some pretty abysmal reviews, and of course, I do understand the majority of people leaving reviews are ones that are going to have negative experiences with a company. It's less likely that somebody who approves of the company is going to bother leaving a review on a company like this, but a lot of other companies have a much higher standard. As an example, we can take a look at Texas Instruments, and I know that they're not a comparable business necessarily, but still a 4.1 star review with 83% would recommend to friends and an 87% approval rating of the CEO is a much better thing to be looking at. To me, all this tells me is that the company is not able to satisfy their employees, probably not financially or even work-life balance wise, and that's just going to cause attrition to be very high, and it's going to cause a lot of employees to be unsatisfied with their job. And the last thing I want to take a look at is some metrics on Seeking Alpha. If you guys are enjoying the video so far and you have made it this far, I'd appreciate if you could leave me a like. It helps me out a ton. Now, in the past year, the company is up 19%, which is pretty good, but they have been rocky for quite some time. It peaked in February of 2024, and it's since dipped down pretty low, and then now that it's up again is when I decided to sell the stock. In the past 5 years, they're up 52%, which is pretty strong, and my initial buy was right here in March of 2023, so basically very close to the bottom of the stock price. Now, I wasn't necessarily trying to time the bottom, I just thought it was a good opportunity to buy a good quality company, and I was expecting to hold it for the long term. Now, over the past 10 years, the stock has appreciated 133%, and that's just price appreciation. It's not including dividends being reinvested back into the company. Moving into their dividend scorecard, you guys can see that a big reason I bought this company was because of their dividend growth history. 17 years of consecutive dividend growth is pretty good, and the 5-year growth rate at 8.22% is solid. The current payout ratio sits under 50%, which is healthy, and the dividend yield sits at 2.12%, which is not too bad at all. However, the dividend is also what made me sell the company in the end, and you can see how flat it's been and for a very long amount of time before they finally increased it by a measly amount. Scrolling down here to their dividend payout history, we can see exactly what I mean. The company had a dividend of $1.18 in 2022, and they raised it to 1.3, and then they waited, look how many quarters they waited. They waited 1, 2, 3, 4, 5, 6, 7, 8, 9 quarters with the same dividend before they did a very small dividend increase. Now, to me, this is something I was not satisfied with at all. You can see a whole year here without dividend increases, and they technically cheated their dividend increase just a little bit because they did increase it from 1.18 here to 1.3, so 2023 is a little bit bigger, and they almost waited the maximum amount of time before they had to increase it again in order to avoid losing their dividend growth streak. Consistent dividend increases are very important to me in my dividend section of my portfolio, and I just can't trust that this company will continue increasing dividends consistently going forward. Now, in terms of valuation, their valuation is a little bit high for my liking as well, at 23.7. I think they definitely should be trading at a slightly lower valuation for their current growth rate. Now, of course, this could be pricing in future expected earnings, in which case it might pay out for investors, but for me, it's just a little bit too high right now. To put that into perspective, Google does trade at a lower valuation right now than Union Pacific, and at least for me, I'd rather be purchasing Google than Union Pacific. Let me know down below if you guys agree. In terms of growth, their year-over-year revenue growth was negative, and going forward, it's still expected to be pretty weak, and that's also pretty alarming as a shareholder. Now, lastly, taking a look at their profitability metrics, according to Seeking Alpha, their gross profit margin is at 55%, which to me is actually surprisingly high. I was not expecting it, so I have to give them credit for that. As always, that does bring us to the end of today's video. I really hope you guys enjoyed watching this deep dive into my position Union Pacific, as well as seeing the reasons as to why I decided to sell the company. Now, I am confident that the company will continue doing well going forward, but to me, it just felt like a right company, wrong time kind of scenario. I could definitely see myself opening a position in Union Pacific or one of their competitors again in the future, and so for now I'll leave it on my watch list just in case. Now if you did make it this far into the video, I do want to know if you are selling any stocks yourself or if you're just going to continue holding on to what you have for the time being. If you haven't yet checked out last week's video where I cover Realty Income and their 4th dividend increase of the year, check it out right here. And if you want to see which company I've been recently buying, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank you all for watching, and I will see you in the next one.